Hello, taxpayers. Welcome back to the IRS Tax App channel. Today we're diving into the recently released tax rates for 2025, straight from Revenue Procedure 2024-040. These numbers will directly impact your paycheck and tax return, so pay close attention. Did you know the standard deduction for married couples filing jointly will be $30,000 in 2025? That's right. And it's just one of many inflation adjustments you need to understand to maximize your tax strategy next year. Let's start with the tax brackets. For 2025, we still have the 7 tax brackets ranging from 10% to 37%. For married couples filing jointly, the 10% bracket applies to income up to $23,850. The 12% bracket covers income between $23,850 and $96,950. The 22% bracket applies to income between $96,950 and $206,700. The 24% bracket handles income from $206,700 up to $394,600, while the 32% bracket covers income from $394,600 to $501,050. The 35% bracket applies to income between $501,050 and $750,600. And finally, income above $751,600 falls into the 37% bracket. What about single filers? If you're filing as single, your 10% bracket applies to income up to $11,925. The brackets then progress through 12%, 22%, 24%, 32%, and 35%, with the 37% rate kicking in when your income exceeds $626,350. Let's talk about the standard deduction, a crucial number for most taxpayers. For 2025, married couples filing jointly get a standard deduction of $30,000. Heads of households can claim $2,500, while single filers and married individuals filing separately get $15,000. If you're 65 or older or blind, you get an additional standard deduction of $1,600. This increases to $2,000 if you're also unmarried and not a surviving spouse. Capital gains tax thresholds are also adjusted for 2025. For married couples filing jointly, the 0% rate applies up to $96,700 of capital gains income. The 15% rate applies between $96,700 and $600,050, with the 20% rate kicking in above that threshold. For families with children, the child tax credit is vital. For 2025, the refundable portion of the child tax credit under Section 24D, 1A, will be $1,700. Small business owners, listen up. Under Section 179, you can elect to expense up to $250,000 of qualified business property in 2025. This benefit phases out when your business places more than $330,000 of qualifying property in service. Planning for retirement or education expenses? For 2025, if you have United States savings bonds for higher education, the exclusion begins phasing out at modified adjusted gross income above $149,250 for joint returns and $99,500 for other returns. For educational loan interest deductions, the maximum $2,500 deduction begins to phase out when your modified adjusted gross income exceeds $85,000 for single filers or $170,000 for joint returns. Now is the perfect time to start tax planning for 2025. Review your withholding, consider bunching deductions, and maximize your retirement contributions based on these new numbers. Need personalized advice? Consult with your tax professional about how these changes affect your specific situation. If you found this information valuable, please hit that like button, share with friends who need to know this information, and subscribe to the IRS Tax App channel for more timely tax updates that could save you thousands. Turn on bell notifications so you don't miss our next video on maximizing deductions for 2025.